Welcome to the daily update, where I'll go over the action in the market for Thursday, August 28th, and we'll see how things look for Friday, August 29th. All right, even though the market's been appearing a little bit more vulnerable, we still had another up day, set another all-time high, and climbed above 6,500 for the S&P. We're seeing some improvement, but a little bit of weakness that's developing, especially with one of our indicators, and I'll go through that later. The big news is going to be Friday. We're going to get personal income and spending. The big report inside of that is going to be the core PCE. That's known as the Fed's preferred inflation gauge. If it comes in friendly, the market could continue to add to gains. If it comes in hotter than expected, that might cause some problems. We're still above the 64, 68 resistance level that I've been harping on for the last 2 or 3 weeks. But that's a weekly chart. And so it's only going to really count if we close above that level on Friday. That would put us above that level for the entire week. And that would make things look even more positive in the longer term. Futures are pretty quiet. I just checked them right before I started recording. It's about 8 or 9 hours before the market opens. Europe hasn't even opened as I record this. So there's lots of things that can happen between now and then. All right, so right at the open, again, we're seeing these flat opens. We're seeing the futures kind of quiet, a little bit up, a little bit down, not really seeing an awful lot of conviction. Most of the price movement is actually coming during the session each day, where we had a flat open and then prices found support. So we dipped down a little bit below the unchanged level, went negative for a while there, not for very long, and then we found support at the daily pivot, 64.73. Then we were able to climb up out of that. We climbed back above the unchanged level, above R1, 64.93. We actually got above 6,500 and we closed slightly below R2 at 65.05, but again, above 6,500. We were up 0.32%, and that's what we're seeing. Quarter of a percent up, quarter of a percent down, third of a percent up, third of a percent down. Smaller movements than what we usually see. We were below average with volume and it did drop off. We've seen two back-to-back all-time highs now on below average volume. That's a classic negative divergence in technical analysis, but not really a surprise having that we're dealing with the latter part of August. And then we're going to have a 3-day weekend coming up here, and there might be some squaring up that may happen during the session on Friday to maybe hedge or close out some positions because of that extra day. Some folks might not want to carry them over the holiday weekend. We're positive on all three time frames in the short, intermediate, and long term. Interest rates behaving better now. That's helping stocks as well. And the big reaction in Thursday's session was to the earnings report from Nvidia that came out Wednesday after the close. Nvidia did end up closing lower, but not by very much. It was down over 3% there for a while in the off hours, and then it clawed its way back. That helped the market to show a little bit more confidence in Thursday's session. So some comments. We set another new all-time high, and we're back above, or we are above for the first time ever, 6,500 for the S&P. Mega caps had a pretty good day. That's really what drove things up. We didn't see more broad participation like we had been seeing over the last few sessions, and we actually saw growth have a better day than value. There's more Fed drama that's coming out here. Fed Governor Stephen Moran's confirmation process may be fast-tracked to appoint him before the gathering, the next meeting. They're supposed to meet here September 19th, I believe it is. And maybe that will help get more of a consensus as far as what they're going to do with interest rates. Then also the other drama that's going on, Fed Governor Lisa Cook filed a suit challenging her dismissal by President Trump, reporting that the lawyers came out and said, oh, that was just a clerical error when I stated that my vacation home was my primary residence. So, yeah, it's a typical defense there. An initial hearing is scheduled for Friday morning, so we'll see if anything comes from that. This doesn't really seem to be having any impact on the market. And then on the short term, we're seeing a bit more conviction now. Where the slope oscillator, that's been on the list. It's extreme and it's above its moving average, but it's still conflicting with the other short-term oscillator that we look at, which is going down. But the other oscillators are continuing to drift lower. But the Williams percent R, that's been on the list. But two new additions are the CCI 14 and the CCI 20. So we're seeing a bit more positive conviction. The stochastics, that's been on the list now for 2 days. So that continues to look extreme. Intermediate term, the Sean trend meter has been on the list now for a while. A new addition is that we're getting far away from the 50 period moving average again, measured by the boom indicator. No change to the overall scenario. The market's pretty much counting on the Fed cutting rates at least by 0.25% in September's meeting. The dollar was down. That did help stocks to go up. Interest rates were also down 4.21%, where they had been at 4.42%. We are looking more positive, but not necessarily extreme. But the flow is that it's getting more positive, and we go with that until we get up near the 75 level, where it was at 62, it jumped up to 66. We are positive with the trend. Now we're starting to see in the short term the ADX crossing above its moving average, and the green line is above the red line. So the short-term trend is now looking positive and starting to get a little bit stronger. We're not there yet with the intermediate term chart, and we're with the bias, we're up since that was an up day, so we're positive there. Momentum, I'm still keeping mixed to positive. That's mainly it's the McClellan oscillator for the S&P that went down and actually dropped below zero again. And when that drops below zero, that makes the summation indexes also go down. And that's a primary indicator there that I determine the primary indicators that I really look at. Okay, so had a few reports here. This was actually good as far as market conditions. GDP, the first time we had this report, the first estimate came in at 3%. And that's what they thought, yeah, that's not going to change. Well, it actually came in stronger at 3.3% there, and the deflator stayed the same. So that didn't go up. It would have been even better if it had gone down, but the fact that the market already liked this anyway, that it was at 2%, and that's what they expected. And then jobless claims, at least initial jobless claims, actually declined. We're back down further into that range that we've been in at 229,000. They thought it was going to be at 236,000. Last time it was at 234,000. And we actually saw for the first time in a little while here a decline in the continuing claims. Still pretty high overall, 1.9 million range there, but it dropped from the 1.961 million down to 1.954 million. And then home sales were down 0.4%. They expected them to be up 0.3%. Last time they were down 0.8%. So here are the claims, the initial claims here, that they are dropping off, but the moving average is still going up because we've been seeing this climbing back up. But if you look at all of this, going back even into the spring or so of 2024, we're still within a range. We're not really breaking to the upside, nor really breaking to the downside. But overall, this is being taken as positive and that the labor market remains strong. And we did come down a little bit, but the moving average is still going up with the continuing claims. We were getting a little bit concerned because we were range bound with this for quite a while, and then we shot up and now we're establishing a higher range, but it's not going up, at least right now. So we put it together. The initial claims in red, they declined. We also saw the continuing claims come down. That's in blue. And then the latest reading from unemployment at 4.2%. Now that'll be updated when we get the next employment situation report, which will be a week from Friday after the 3-day weekend. Then looking at the GDP numbers again here. Now the GDP itself, that's the blue line, and it's going up where the deflator is going down. And this is on a quarter-over-quarter basis, and that's good. We want growth to go up and inflation to go down. So that's seen as positive there. And then year over year, personal consumption is going up here. And the net exports are actually declining. They're becoming less negative here. And so that's seen as positive as well. Real GDP year over year, still looking at this pretty much flat, right around the 2% level, where it had been declining, but it's not really continuing to go down. And that is taking inflation into account. That's what real GDP means. And the pending home sales declined, but they weren't down as much as the last time we had this report. Okay, then we get from real investment advice, consumer confidence and higher stock prices versus trailing valuations. Now, these are earnings reports that have already come out. The market tends to use forward-looking valuations here, and then there's some charts where they shift it around and so forth, where you can see there's a pretty close connection between the red line and the black line, and they're pretty much in line with each other now. And then 20 period a day moving average, I use it just as I just say MA for that. It's acted as support in 2025. We've seen that quite a bit. The pullbacks that we've had, when we finally broke out to the upside here back in late April into May, anytime we've pulled back, we've only pulled back in all of the consolidation that has taken place, except for one day, took place above the 20 period moving average. And we did come down close to that and then have been bouncing it up. So here, bouncing back up. 5 times since the tariff lows. That equals support. So that's why we watch this chart. If we do start to decline, we'll be really watching the 20 period moving average because it's been very important recently here in 2025. It's always important, but it seems extra important right now that we finally broke and started to turn back more positive. And concentration of market cap and earnings in the 10 largest stocks that make up the S&P. Market cap is 39%, are in the 10 biggest companies, and earnings make up 30% of the S&P 500 with the 10 biggest companies. Then forward PE ratio here, take it all together, we're at 22. We're considered expensive. We see this. We get charts like this pretty much every day. I also will be going over them in the weekly video as well as the intermarket analysis video as well. But yeah, we're expensive. And as I keep saying, this doesn't seem to matter. We've been overextended now for many years, and it doesn't matter until it does. That's why we can't really use this as any kind of a timing mechanism. I mean, if you base things around when the market became expensive, you would miss out on a majority of the gains. Where the equal weight version of the S&P, it's above that 15 level, but it's still below 20, coming in at 17. And the financial conditions, and this is what's helping the market to go up. We're seeing this declining down, which means there's a general easing in the financial conditions, and that helps the stock market to go up. And recent mutual fund and ETF flows, still a lot going into money markets. That's where we see most of the money going in. A little bit more going into bonds and actually seeing less money going into equities or stocks. Healthcare sector weights, and it's an important part of the S&P 500. But when we look at the earnings, it accounts for about 10% of the S&P. The market cap is about 9%. And healthcare's just been getting slaughtered here. Well, things have been coming down both with their earnings and with their market cap. And we're seeing a little bit of improvement, not so much in Thursday's session, but sometimes we see little pockets of healthcare, which is a defensive sector, showing some improvement. Then announced buybacks according to sector, seeing that in financials. And we're still seeing the financials improving. They've got some damage left to repair when we look at the ratio between the financial sector and the S&P. It's improving, but it hasn't turned back positive. It's going to take some time for that to happen. Where most of the least number of buybacks here are in utilities. And U.S. consumer spending, inflation adjusted through June, not really strong here. So people aren't spending much when you look at it on an inflation basis. So prices are going up, but people aren't actually buying anything, buying as much when you adjust that for inflation. Okay, cross asset volatility. I mainly focus on stock volatility first, and then we also look at the MOVE index, which measures bond volatility. And there's some other ones here that go with currencies. We're seeing it pretty low overall. Even though the dollar's been declining, the JP Morgan's Global Foreign Exchange Volatility Index, that's the one in orange. It's also pretty low right now. And this brings out the statement that low volatility tends to be followed by high volatility. Now we're going to be getting ready to go into September, and if you think August doesn't have very good statistics, and we're still waiting to see how Friday is going to play out, September's even worse. And there's one chart at the end that I'll show you some seasonality there as we get ready to move over into September. But at some point, we don't really know when that point's going to happen, but we still see volatility really quite low. And that is usually followed by periods of quite high volatility, like we saw back last spring. Okay, then corporate earnings, profit-based corporate profits have been cooling off. This is what I've been talking about, where earnings are still looking good, but not as good as they were originally projected. And we're seeing these coming down a little bit. So still positive and still showing growth, but not as robust as they were. You can see we saw much higher readings with this particular way of measuring earnings. And then central banks and gold. Foreign banks now officially hold more gold than U.S. Treasuries for the first time since 1996. Okay, so we see where foreign reserves of gold is now passing U.S. Treasury holdings as a percent of foreign reserves. Okay, not sure if that's really meaning something or not, but it's something just worth knowing about. And then the federal funds rate against stocks, the equal weight index typically outperforms when they cut rates. And we've been seeing some improvement, not so much in Thursday's session, but we've got the S&P equal weight index actually coming off of all-time highs when the regular S&P was not. And that's when we see an improvement in anticipation of the rate cuts that the market is expecting will happen in September. Risk on, risk off, and I show some charts that show the same type of measurement. When these are going up, that means the market is more risk on, and that's when the market also tends to go up. And then the Magnificent Seven event against the rest of the stocks. Here's a bunch of charts here just showing analysts expect Magnificent Seven earnings growth to stabilize over the next 6 quarters, but still deliver double-digit growth. The baton is being passed to the rest of the stocks in the S&P, whose earnings are expected to accelerate in the mid digits by the third quarter of 2026, so a year from now. So they're seeing more acceleration here where things are going to stabilize with the bigger stocks. Now, we've seen charts like this before. They expect this, they expect that, and then the result ends up being quite different. Or it may play out similar to how they have it projected here. That's why I don't do forecasts, because they never get it. All right. So here is the intraday chart where not really much of a change at the open here. And then we immediately went down, but we did find some support here at the daily pivot, tried to go up, came back down to the daily pivot. Then we set up this base right here. And then finally we were able to break above it and go to R1. We made it all the way up to R2. You think these pivot points are important? That's just about where we topped out. And that was above 6,500, and we closed just a little bit below 6,500, or a little bit above, excuse me, a little bit below R1. Not much of a change. There's probably some anticipation ahead of the core PCE report coming out in Friday's session. We're seeing an improvement here. The blue line is back above the red line, and they're both going up. That means growth is outperforming value intraday. This has also been gradually improving as well, the intraday growth to value chart for the S&P. And then our end of day charts, though, where growth was up, value was down. But then we look down here, we're seeing some improvement when we look at the mid caps, where growth was up, value was down, where um, growth was down, but down less than it was for value for the small caps. So we've been seeing a trailing off, though, with our end of day charts. When we look at small cap growth to value, we did see an improvement here, but we're still below the 50-day moving average with mid-cap growth to value, and an improvement, but still below the 50-day moving average with S&P growth to value. So improving, but not really switching back yet to a full-on offensive type of posture. And an improvement, but still at the higher end of the rainbow with the growth to value ratio here. We did set an all-time high with large cap growth, and that had been lagging a little bit, but we saw enough of an upward move here to see a little bit of a breakout. That's encouraging. And then discretionary to staples. This continues to improve and looking a little more offensive right now, where discretionary, that the big stocks there are Tesla and Amazon, and we've been seeing a real improvement with the discretionary itself. And then the staples have been pulling back. And when staples were going up, that was causing some concern because that is more defensive. So we're seeing them dropping off, which is causing the ratio to go up. Then looking at the short-term trend, we are crossing back above the moving average. So now we're seeing a strengthening trend that's positive because the green line is above the red line. We are trending because we're above 20. So now the ADX in the short term is turning back and showing a stronger, more convicted trend. We're not quite there yet with the intermediate term. We're still below the moving average, but we are positive with the green line above the red line. And we continue to be below average with volume. See a real drop off here. Another new all-time high and a decrease in volume. Now, sometimes it doesn't matter, and we can kind of explain it away. We're in the latter part of August, and there's a big economic report coming out in Friday's session. Okay, so you can throw all this in there to kind of justify why volume tapered off. Then sentiment, we're still looking like there's less fear in the market here. We're below 20 with the VIX on a closing basis and below the moving average. We're also below the moving averages here with the bar chart, which measures the open, high, low, close. This just hasn't started to develop yet. When we get into August and then September, typically the VIX will go up. So far, that has not happened, but that could change at any time. And then we look at the volatility of the VIX, also dropping down below the moving average with the bar chart and the line chart. Still getting a fairly high reading, but we're starting to come down here with the skew index. So the market's still anticipating some kind of a big move. And a little bit of an improvement with the individual investors. They were more negative a week ago. They're getting a little bit more positive, but they're still net negative overall. And that could actually help the market because we tend to use this in a contrarian manner. Now, typically we use it in a quite a contrarian manner when we start to get extreme positive or negative. But you have a lot of people that don't really believe that the market should be going up, and that's probably one of the reasons it is going up. And we see a little contradiction here. We ticked down a bit with this fear gauge, where we ticked up a little bit with this other fear gauge. So not a real confirmation there. And we did see a real spike up here, and this could be some hedging ahead of the core PCE report coming out on Friday. The daily chart really went up, meaning there were more puts than calls that were bought. So after coming down to this red line, the 5-day chart is now starting to bounce back up. That's seen as more negative, but we're still declining with the 10-day chart, and that's seen as more positive. And we are seeing an improvement here. The risk on to risk off ratio, we've been just chopping around for a lot of the summer. We finally could be starting to break out here with the risk on to risk off ratio going back up. So that's showing an improvement there. We're also looking better with the high beta versus low beta. When this is going up, that's more positive. Then we started to gyrate all over. Now it's looking like it's starting to break out more. And not really seeing anything all that scary here with the volatility risk premium. We continue to be at the lower end of the band. But this is a little bit of a concern. We actually declined with the advanced decline line based on price and volume, even though it was an up day. It was just a few stocks that were really driving the index higher. But in the bigger picture, the advanced decline line is still looking positive, and we're chopping around now, but above zero here with the advanced decline ratio charts. We turned back slightly positive with the advanced decline oscillator. We had dropped down below zero. Now we're slightly back above zero. Rolling over a little bit with our 5-day, but we're still going up here with the 10-day chart. When we look at the new highs, new lows, we're seeing more of an expansion of new highs. There was a little bit of an expansion of the new lows, but overall, this is still looking pretty healthy. A lot more green than red. And our three smart money indicators above the moving average with accumulation distribution, going up above the moving average with the boom indicator. Nice little spike up here with the chicken money flow, and the red line's going up. That's positive. And we're going up above the moving average with the chicken oscillator. So all three of those are positive. And we came down a little bit with the vortex, but the green line is still above the red line. That's positive. And this is longer term, the 10-day average of the highs and lows for the S&P. We're still above the green line. That shows longer term positive momentum. And we actually came down a little bit with our advanced decline line studies here, pretty much across the board, but we're still above these moving averages, and the moving averages are going up. Then we look at a 5-day moving average of the highs and lows across the broad market. That continues to show an improvement as well. And we declined a little bit with those stocks in the S&P above their 20-period moving average, but still getting a fairly high reading. But the context is, as we've been going up with the S&P, this has been starting to go down, and that's a little bit of a negative divergence there. We ticked down a little bit, kind of going sideways lately with the 50 period moving average steady, flattening out with the 100 moving average steady. And we tried to go up, but then ticked down a little bit with the 200 period moving average steady. And here we're above these pivot points here. This has been acting as overhead resistance on the daily chart. We got above it on Thursday and we were able, excuse me, Wednesday, and we were able to stay above it on Thursday. That's the daily chart. And we've been keeping an eye on this, but so far we are above this resistance for now. But we declined a little bit with the 20. We were flat with the 50 and flat with the 200 period moving averages. Improving, but not extreme yet with the Stochc RSI. We're seeing for multiple days the Williams percent are looking extreme, showing good short-term momentum. And we're starting to see more short-term momentum here with the CCI 14 and the CCI 20. It's climbing slightly above 100. And the short-term stochastics, the short chart term is extreme, as is the intermediate term. We're back above the moving average and looking extreme with the long short term. So all three of these are showing positive momentum or more positive conviction. We're still above the midpoint with the force index. That's positive. And we're going up with the green line and the blue line here with the short-term trend based on 20 periods. That's positive. And we're still in the upper end of the +2 channel with the standard deviations chart. We start to get extreme if we get up into the +3 channel. Now, intermediate term ticked down a little bit with the balance of power, but it's still above zero. Still positive with the go, no go with the darker blue bars, and actually coming a little bit above the highest high value, which is the blue line. That's positive. And now we're on day 83 of the current uptrend, which began way back at the beginning of May. Also, still positive here with the proper order. Still positive with the TTM squeeze, lighter shade of blue and continuing to advance. Still not seeing much of a change here with the ease of movement, but slightly positive. And we're still positive here with the Arun. We're above zero with the oscillator and going up. That means there's more buyers and the sellers are dropping off. So we're seeing a little bit of an improvement there. This is what showed a little bit of weakness internally. We've been dancing around above and below the zero line here with the McClellan oscillator. We came a little bit above it after Wednesday. We dropped down below it, even with the up day on Thursday. And when that's below zero, it's really hard to see here, but we're actually going down here based on price. We're still going up based on volume. So not a huge thing, but this just bouncing around like bumper cars. This just shows the lack of conviction that we've been seeing. We have been seeing a little bit more conviction based on volume, where it would go up and down, at least be convicted either to go up or down. But we're still positive with the NYSE McClellan oscillator. It also ticked down, but is still above zero. So we're chopping, but starting to go up again here with the summation index based on price and volume for the NYSE. And we're positive with the Swindler Trading Oscillator, going up based on price and volume. But we're still negative with our momentum. The PMO is still below its moving average, hasn't crossed above it yet. We're flat based on price. We're still negative here based on volume. And then we're declining a little bit. We saw a little bit of weakness internally with the PMOs in the S&P that are rising. We're still above 50, but it came down on an up day. We're starting to roll over just a little bit, but we're still above 50 with the buy signals, and we're continuing to go up for the most part here with the PMOs that are above zero. Positive with the S&P Elder's Impulse system there. So that's looking good. We're also positive with the parabolic SAR. We're starting to get extreme. Now, I put this green line on here, so there's nothing really magical about it. It's just when we make more note of watching this. But we're above the moving average and going up with the slope oscillator. And we're trying to turn up here, but we haven't crossed above the moving average with the MACD. So we're going up with the slope oscillator. That's short term. We are improving, but we're still negative with the TSI. That's the other short-term oscillator, but just kind of drifting sideways below its moving averages with our three intermediate-term oscillators and continuing to decline with the two longer-term oscillators. And still hanging on to slightly being positive, but really flatlining here with the Copic curve. Now we're getting really extreme with the Sean trend meter. We came out of this green area up into the darker green area. Sometimes this is about where we top out. Is this suggesting that maybe we're overextended in the intermediate term? It meant that before. Is that going to mean that again? Is that going to limit more upside potential? Still above 50 with the money flow and going up above 50 with the ultimate oscillator. Still above the moving average with on balance volume. Still looking good with the RSI intermediate term and short term. Both are above 50 and advancing. Still above all three moving averages here, the 10, 20, and 30, and the lines are back to going up. That's positive as we set a new all-time high. Intermediate term trend still going up with the red line and the blue line, and still above all the plotted moving averages, the simple and exponential versions here, and all the lines are going up. And we're not too far away from the 20 period moving average, but now we're starting to get kind of far away from the 50 period moving average. It's still positive and it can go higher than where it's at right now. And the 200-day moving average is still positive. We're above zero, but it's been awful choppy lately. And this continues to improve. The bullish percent index. This was actually looking better even when we had down days. That just means there's some buying going on inside of the S&P 500. So we're above the moving average and going up with the S&P bullish percent index, going up with the NYSE bullish percent index, and even showing some improvement with the NASDAQ 100 bullish percent index. Pring bottom fisher, still working off of the buy signal. And this will be a buy signal until we roll over and start to go back down below the red line. And this is the chart that I've really been focused on, and we still have 1 day left. This R1 level that we were having difficult time for 2 weeks. Are we going to have a third week now? We are above this R1 level. We're above 6,500. This R1 level is at 64.68 if you round it up. So if we do see a bit of a decline on Friday, we're going to be watching that level to see if we end up closing above it. If we don't, then this is still acting as overhead resistance. If we close above this, then so far we've broken above that resistance. And if we do decline from there, we'll be watching to see if that acts as support. And we're still at the upper end of the trend channel here. We've been there for quite a while now. It's positive, but a lot of times when we get about to this point, that's where things tend to stall out. But when you look at the trend, Heiken Ashi is positive, Kegi chart is positive, Renko chart is positive, three-line break is positive. And with the up move above 6,500, we saw a new green X in here. We now have a triple top breakout. It was generated back on August 13th. So this is looking more positive, just showing more buys than sells right now. And we're still looking pretty good here, but not necessarily extreme with our 150 and 200 period moving averages. Positive on all time frames across all the different stock indexes. And switching back over to short term and intermediate term positive based on bonds. Commodities are still positive on all time frames. The dollar is negative on all time frames. And then we saw more of the defensive areas, utilities, staples, healthcare, real estate. Those were the areas that saw declines. Where we saw tech, a growth area. Now, energy bounced back up too. That's usually considered more defensive, but communication was up and discretionary was up. So this helped some of our growth to value ratios to improve. All green here. Energy had a bullish moving average crossover with the ETF. Canada, another day, another new all-time high with the S&P setting a new all-time high. We got above 6,500 with the S&P, the Dow setting a new, it didn't close there, but it set an intraday all-time high. I believe we'll have to look at that chart. Utilities are seeing some more strength here with a BPI across above 80. So Nvidia ended up being down, but Microsoft and Apple were up, but not real big movement there. Where Amazon was up, Tesla was down. That kind of canceled each other out there. Google was up, Meta was up just a little bit. Then you see a lot of red here in healthcare. That's defensive. Utilities considered to be defensive. Staples, a lot of red here. That's considered to be defensive. Real estate, just not really, I guess more red than green here. And we're seeing more of a matchup with the equal weight versus the weighted version of the S&P. So that just means there are more stocks participating. Now in Thursday's session, it was more of the big ones. But throughout the week, we've been seeing the rest of the stocks showing more participation. And here's the Dow. Is that, I don't see this as an all-time high here. So, all right. Anyway, it's not that big of a deal, but we're a little bit above this pivot point here with the Dow. We're still positive. If it was a new all-time high, it was just barely one here with the diamonds, but they're positive. And we're starting to come back up to this pivot point here with the NASDAQ, and we're just a little bit above it. This is the daily chart. We're seeing a convergence of overhead resistance where now we're a little bit above it, and we're above it with the S&P. We're positive with the NASDAQ with the Elder's Impulse system, and we're right underneath it here with the NASDAQ 100. So we have not broken above this daily resistance on this chart, but we are positive with the QQQs when looking at the Elder's Impulse system. Still negative. We've been seeing this negative divergence now for quite some time with the NASDAQ 100, trying to turn up, but hasn't crossed above its moving average. Longer term, the weekly chart of the NASDAQ 100 still above this long-term trend line going back to 2009. And we were down a little bit with the small caps now, but we did generate a recent golden cross here with the S&P 1600, and we were up here with the Russell 2000. See, there are two different indexes, so they're calculated in a different way. One was down, one was up. That's why I follow both of them. So still looking a little bit better here with this Russell 2000 small cap index. Positive with the Elder's Impulse system for the small caps. Up slightly with the mid caps, still holding on to their gains, and positive with the Elder's Impulse system. The Wilshire 5000, a broad market measure, setting another new all-time high. Also setting a new all-time high with the total U.S. stock ETF. Financial sector setting another new high here and improving, even though we came down a little bit with the ratio. We're still below the 50-period moving average, and we still had a recent death cross with this ratio. So this has been coming up, but we want to see this go back up and show even more improvement. And setting a new all-time high now with the FANG index, the really big stocks. That's where we got most of the strength from in Thursday's session. So Apple was up 0.9%. We had Amazon up over 1%. Microsoft up over 0.5%, trying to get back above its 50-day moving average. Amazon up over 1%. Microsoft up over 1%. Okay, am I hitting the wrong buttons here? Google up over 2%, setting a new all-time high. Meta still hanging out above its 50-day moving average. Nvidia down. It was a good report, but the looking forward numbers didn't please everybody as much as they wanted to be pleased. And then Tesla was down over 1%, but still above both of its moving averages. Netflix was up. Now it's dealing with a flat 50-day moving average. We're still going down with the staples to tech ratio, and that's positive. That means staples are underperforming, and we're still going down with the staples to S&P ratio. That means staples are underperforming the S&P, and that's quite positive there. I wanted to show the discretionary to staples. Now, this is the weighted way that this is measured, and that's been breaking out. It's actually been looking even better when we look at the equal weight version of discretionary to staples. Well, we're starting to go back up with tech to utilities ratio, but we haven't really broken out yet. A bit of an improvement with biotech, which is growth, to healthcare, which is value. Biotech's been improving. And then we look at hotels to utilities. That's also improving as well, but still has a ways to go to really break out to the upside. And seeing a little bit of a bounce back here after getting neutral when we look at the long-term correlation between U.S. stocks and world stocks. Still seeing this going up with the longer term correlation. We did go up with oil. That's really what helped the energy sector to do better. We're still in the mid 60s. And we actually declined here with the dollar. We're back down a little bit below the 50-day moving average and also in a longer term downtrend. We are dropping off with the 10-year yield, and that's helping stocks to go up as well. And we're going up with the 10-year based on price. And improving, but still below a declining moving average with the Qs to S&P, rolling over a little bit, but still above an advancing moving average with discretionary to the S&P, and coming back up to the moving average when we compare large cap growth to value. This had been weakening a little bit and now starting to improve. If we can get above this and see the moving average turn back up, that'll be more positive. So we're a little bit above the moving average with the large caps, coming back up to a declining moving average with the mid caps, and still well below a declining moving average with the small caps. So the outlook, we're positive on all three time frames. Growth is showing some improvement. Can that carry through into Friday's session? And for right now, I'm still calling it overhead resistance because I'm mainly basing this around the weekly chart. It's not official until we close on Friday. So we're still calling that overhead resistance. And we're going to get the advanced international trading goods, not really impactful, as well as the advanced retail and should be wholesale inventories here. And then this will be the big one, the core PCE. That's what the market's really focused on, as well as personal income and spending, and the Chicago PMI, which is more regional. And we'll get consumer sentiment, which has kind of been a little more important lately, seeing how people are feeling about things. And then anything geopolitical, there's all kinds of stuff going on, but it's not really having much of an impact on the market. Right now, and the market's not really even paying attention to as the Fed turns. Right now, we'll have to see if anything works out in that area, either positive or negative. Here's a look at the finishing of the week for the economic calendar, also what the previous readings were and what the forecasts are here. Seasonally, not really all that great. We're neutral to negative with the Dow. We're neutral to positive with the S&P and NASDAQ for August 29th, going back to 2002. And we see a little bit of a tick up here in the post-election year. But the weakness that we typically see in August just didn't develop. At least if it's gonna, it has one day left to do it. And we're still waiting to see. Are we going to be able to have a positive August for the first time since 1950 during a post-election year? This also shows how we're typically weaker right about now. Also, seasonal weakness shown here. Now, this is what I'm talking about for September. September is not all that great either. You go back the last 74 years, we're up 33 out of 74, down 41 out of 74 with a return of minus 0.7%. And you look at for the Dow, the NASDAQ, the small caps, these are large caps, Russell 1000, and these are the small caps. Negative across the board. And September tends to be a pretty weak month, but so does August, and so far the market's been holding up well there. We're back to slightly more negative now with the S&P McClellan oscillator and summation index. We're still leaning more negative with our oscillators, even though the Copic curve is positive, it's flatlining right now. And the momentum for the NASDAQ 100 continues to be negative. We're still at a -6 with the Zohorchak method sell signal, where it improved from a previous reading of -10. On the positive side here, looking good with all three smart money indicators. The growth to value ratios are improving, and we're still seeing a general improvement with discretionary to staples, where even though we declined, we're still above zero with the NYSE McClellan oscillator and summation index. Swindler trading oscillator still going up based on price and volume. Parabolic SAR is positive, the bullish percent indexes, and this has been encouraging. We've seen it go up even on down days, especially for the S&P and the NYSE. And then to have an up day and to still see it go up, that's been pretty encouraging there. And then the ease of movement, money flow, and ultimate oscillator are positive. The vortex is still positive, and the financial sector positive by itself, setting new highs, but trying to improve, but still underperforming the broader S&P when we do the ratio. And we're still working off of a Pring bottom Fisher buy signal. And the long-term special K chart, which I'll show over the weekend in the weekend videos. Here are the pivot points for Friday's session. So our conclusion, we're positive and we're above overhead resistance. We'll see if we can hang on to that in Friday's session. In the short term, we're seeing some more conviction, positive conviction. We're going up with some of our short-term charts. We have the CCI charts now on there. They are new to the list as well. I'm just saying we're positive in the intermediate term. There's a little bit of a caveat there because we're actually dropped below zero with the McClellan oscillator, which the McClellan oscillator is short to somewhat intermediate term, where I treat the summation index more as intermediate term. And we continue to be positive in the long term. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.